Guys, what is going on with Carvana? Have you guys seen the news lately? So, if you're unfamiliar with Carvana, Carvana is literally a vending machine for cars. You got it. So, they actually went IPO, which is initial public offering, back in 2015, I believe, if I'm not mistaken. They grew, they're Arizona company, been growing. And so, they've been doing really, really well. But now they're at about $7 per share. Guys, they are almost at nothing. What's going on? So I want to talk to you guys about what happens to a company and even a shareholder like yourself when a company's share or stock goes down to $0. We're also going to talk about the car industry like Ford and Tesla and what's going on with them and how that's affected, just like Carvana. And I also want you guys to understand how important our emotions play in the stock market. I'll give you some examples. Let's take a look at the charts right after this. All right, so let's take a look at what's going on and where price is now. If you look over to my right, $7.08 is currently trading per share. And we can see that it's been continuing to drop. So what is going on, guys? What happens if you're investing, and let's say you invested when it was at $90 per share, you see it drop, and what if it hits zero? Let's go ahead and talk about it. But before we do, let's go ahead and talk a little bit about Carvana and what it's about. So like I said in the intro, it's literally a vending machine for cars. They sell used cars. That's what they do. They sell used cars from Lamborghinis all the way down to a Subaru, right? Now, typically they've actually been doing pretty well, but lately, guys, it's been sinking in value. And just to give you a perspective here, back in August 2021, right here, it was trading at about $360 per share. So if you wanted to buy only one share, you would have paid $360 just to invest in them for one share. Now it's worth $7. So should you buy now because it's really, really low? It can't really get too much lower besides zero. Or should you get out and leave it alone? Is the company going bankrupt? So I made a video prior to this about quarterly earnings reports. That's really, really important in things like this. And if you haven't watched it, I want you to take a look at it after this video because it talks about the cash flow of a company, their investments, what they're bringing in versus what they're taking out. So that's really important before you even decide what stock you should invest in. But guys, it is literally down to $7 a share. And it's been dropping every single day. Just yesterday, to give you an idea, it was at $13, almost $14 per share. And now it is about half the price than it was yesterday, and it continues to drop. So some investors will say, hey, this is a good opportunity to buy a lot of shares for very cheap if I believe in this particular company. So one, you want to make sure you believe in this particular company. And then two, look into their background. Do they owe a lot of money? Do they owe a lot of debt? Why have they been dropping? Now, to give you an idea of what's going on, guys, when price was all the way up here, right, all the way at the top at 360 per share, something happened for it to continue to drop here, right? So our white candles are pretty much when price had begun to rise. Our red candles are when they were dropping. So a lot of red candles, way more than white candles, drop. And when you see this, and if you are an investor in Carvana at that particular time, it's like a snowball effect. When you're looking at your money drop, a lot of people are letting go. A lot of people are letting go. And then when you continue to see it drop, there's more people letting go. And then it drops again, more people letting go because they're like, you know what? I'm already taking a loss. I don't want to lose any more money. And they let go. And it's a snowball effect. So that's what's going on. That's why we see this major downtrend with Carvana, because a lot of people started releasing really fast, really, really quickly. So if we look back here in March 2020, that was the highlight of the pandemic when a lot of stocks started to drop. The housing market, the stock market, the currency market, it dropped. It was at an all-time low, and then it started to rise really high, a strong bullish uptrend here, right? So I'm going to go ahead and get my tool here, and it just continued to draw up high. And something happened in August 2021, in which we'll look at and investigate, and it started to drop, and now it has actually broke lower than March 2020, and it currently at $7 per share. So would it be wise, it goes back to my question, would it be wise to actually buy at this point very, very cheap? Even if you bought 20 shares, right? All you do is multiply 20 shares times $7.09, and that's all you would invest in. However, the worst that can happen is that if it gets down to zero or close to zero, you will lose your entire investment. But if it doesn't, you have gotten in really cheap. And if it goes up, the sky is the limit. So if it starts to go up and people start noticing it, then they will start purchasing at $60 a share, and then $80 a share, and $100 a share when you got in at $7 a share. So that's a benefit if you happen to get in. But is it wise to get in? Let's take a look. So it seems that Carvana ran out of cash in order for them to stay in business with high risk premiums that will rise across the market, which can further squeeze their levels of liquidity in which they can go into default. The car market industry in its entirety has struggled. We're going to look at Ford and we're going to also look at Tesla, but Carvana has been struggling to generate positive free cash flow. So let's talk about what happens if a stock hits to zero. Most people think that when a stock price hits zero, that's when it goes completely out of business. That's not true. The opposite is actually true. When the business loses money and starts to go bankrupt, then the stock itself starts to drop. So typically reputation rules everything. The reason why a stock is where it's at is because of one or two things, because of reputation, and then also the money, the cash flow, and everything that they own. What are they worth? Now, sometimes a stock can be lower than what a company is worth, but it just depends on what's going on. So what I mean by reputation, so you remember when Chipotle back in 2015, when there was a whole E. coli breakout. A lot of people were afraid. There were people who got really sick. I'm not sure if there were any people who died or not, but their stock dropped tremendously. The reason why is because of reputation. You don't play with anyone's food, right? And because of that, a lot of people stopped going to Chipotle, right? A lot of people stopped going to Chipotle. And if a lot of people aren't going to Chipotle, that means there are no money coming from consumers going into the business. And so therefore it makes the stock drop. And then also the reputation of hearing something like that, people are like, you know what? I need to take my money out. I need to get out because I see the whole stock starting to drop, just like that snowball effect that I told you about with the Carvana example just a moment ago. Now, it actually took a few months, all the way into 2016, the beginning of the new year, for their stocks to start to rise again. Now, why did it take so long? Because of reputation. It takes a while for a company to build our reputation, especially when it comes to our health. That's one of the number one things that can affect the stock is our health. You don't want to play with our health. So if people feel comfortable enough to start going back in and eating at Chipotle, then people will start investing again, which will make their stock begin to rise again. So let's go back to what I talked about when a stock hits $0 a share. So a stock never really hits $0 a share. The reason why is because there has to be someone on the other end willing to buy that share for $0. That just doesn't make sense. So typically when a stock hits a certain threshold or a certain price, then the stock market exchange that it's listed under will delist them. And delisting them simply means that they will take them or kick them off of their exchange. So for example, the minimum required for the New York Stock Exchange for a company to have their share listed at is $1. So if a company has their shares listed for $1 or more, then they can be listed on the New York Stock Exchange. For another example, for the NASDAQ exchange, I believe the minimum is $4. So a company has to have their shares listed at least $4 in order for it to continue. As soon as it drops $4, then they will be delisted. So Carvana could fall to zero as the Feds increase interest rates and access to cheap capital is quickly drying up. And as a result, some companies are defaulting on their interest payment like Carvana without the possibility of refinancing. So we're going to go ahead and take a look at Ford, for example, and see how they're doing. So here's Ford company right here. And so there looks like they're actually doing pretty decent. They're at 13.67 per share. So they're typically low. Now, just as of January 2022, they were at $24.98 per share. And they've been around that range for a while. Now, back in April or March 1999, they were all the way up to about 36 or even higher than that. So this is their typical range. Now let's look at Tesla. Tesla is pretty much shooting all of them out of the water. And I personally think it's because of their innovation, right? They're completely different than the rest. And if you look at where their share is at now, they're at $190 and some change per share. So if you wanted to invest in Tesla for one stock or one share, it would be worth $190 currently. So they're actually doing pretty good. So like I said, the company itself doesn't determine what the share price will be. There's a whole bunch of other things that's taken into account. Number one, we need to see what the company is worth. What are they putting out versus what are they taking in? Are they losing more money than what they're profiting? Number two, reputation is what I mentioned as well. If you own a Ford and you notice that a recall is going on with a failure for airbags on a particular truck, that's dangerous, guys. You don't play with anyone's health, anyone's life. So when you see something like that and there's a recall, I can guarantee you that the stock may drop. Now, even though the stock may drop, that doesn't mean as much because Fords are really good cars. So let me give you another example. Let's say McDonald's, for example. A lot of people like McDonald's French fry. Now, if for some reason there were some people who were choking on the French fries and there was a lawsuit against them, their share or their stock may drop. However, their fries are good. A lot of people like fries. Now, just because someone choked on a French fry doesn't mean it's not worth that value. So you have to understand the difference between the reputation and then also how the business is doing. People love their French fries and they're going to continue to buy it, right? But that doesn't necessarily play into why that person choked on a French fry and suing that person. So reputation is really key. And then also, like I said, you want to see what the company is bringing in and what the company is taking out. What do they owe to the banks and what their overall scorecard is. So that goes back to that other video I mentioned to the quarterly reports. I'll go ahead and put it right here. And then also we'll tag it at the end of this video as well. Guys, that is completely it. Guys, let me know if Carvana is something worth investing in right now. Is that something worth investing in? It's only $7 per share. Would you buy a few shares of that because it's dirt cheap and think that it's going to continue to go up and rise? Or do you think that that is the demise of Carvana, the vending machine company? Guys, I will see you in the next video. Don't forget to like, subscribe, and comment if you haven't already. Join our Telegram for free trading ideas and tips for Forex and stocks. We do both. And I will see you in the next video. Take care.